Welcome to the second day of the NewSpace 2012 conference. My name is Dan Pastiff, and I have the pleasure of being today's manager for the day's proceedings. Yesterday we had the opportunity to discuss how different models can lead to great ideas. Yesterday we had the idea to discuss how different models can lead to great ideas and how the average citizen can get more involved to make space more relevant to everyone. Today we'll jump forward and examine how that work and others can serve to drive us forward in opening up new opportunities in the space industry. This leads me to our starting panel. Any new business venture needs to understand the difficulties and challenges that it'll take to launch itself. One of the most critical components in particular in the space industry is securing investment. This morning's panel will focus on how to create a viable industry, and I hope this panel will be useful as well for our business plan competition. To lead this panel off, I would like to introduce Mr. Lon Levin. Mr. Levin has over 25 years experience in new media, space, and telecommunication industries, having served as the founder of Courses XM's radio. He currently serves as the president of Sky 7 Ventures, which works with and invests in new technologies. His recent work has included working with companies such as Slacker Radio, ATK Aerospace, Blue Ridge Networks, and Sentinel Satellite. Without further ado, Mr. Levin.
What are you applauding for? All right. But thank you for applauding. And by the way, actually, I want to applaud you for those of you who are at the party and somehow worked through your hangovers and now you're here. I appreciate it very much. There'll be plenty of parties, I'm told, so if you came home early just to get enough sleep to be here, that's even better. Well, thank you all for being here. I was looking at this Space is a Place, Not a Program, that one. And as I was looking at it yesterday, thinking about our panel, it's really space is a business, not a program, which I think is where there's a change over from space being government programs. Government gives you money, you get going, and you manage the money that you get to building businesses in space. I want to introduce the panel. We're going to talk about a number of things. First, a few things. We're going to be interactive throughout the entire discussion. No presentations. Please ask questions if they come to you, and I'll try to recognize you as quickly as I can. Also, you can tweet. Here's the tweet information over here. And also, we're going to be on the internet, so there'll be other questions. They're all going to come to me here. So any way you want to communicate with us, we welcome them. Is this on too? This one isn't on. Is it? Is it off? Okay. Great. Let me introduce the panel here, and then we're going to get going. By the way, you can read their bios in the book. No big bios here, just real quick things, so you know who everyone is. Over here is Diane DeMeff. Diane DeMeff is the executive director of eSpace, which is a nonprofit group that helps entrepreneurs develop different ideas in the space area. Over here is Hoyt Davidson, the founder and managing director of Near Earth, which is one of the premier investment banking firms in aerospace. Larry Williams, my friend Larry Williams here, who has been an entrepreneur for many, many years. He has had the privilege of working with both Craig McCaw and Elon Musk at various times. By the way, Craig McCaw also a mentor of mine, as you know that. And Larry now is the principal of Capture 10, which works with high technology companies. And my friend here, Robert Jacobson, and Robert is the principal with Space Angels Network. All four of them will be speaking with you about new businesses, how to get going, what they look for in investments, recommendations to entrepreneurs, and anything else you want to talk about. And my first question is not how do you make a decision to invest, but the very first question is, what do you look for when someone comes to you and has an idea? What are you looking to continue the conversation to the next level? I asked that of Robert first. And there's the mic.
Good morning, Lon, and good morning, everybody. Thank you for coming on this early morning. So the first thing is, can I understand this idea? And better yet, can my mom understand this idea? Has been articulated in such a manner that, my mom, a non-engineer, could understand this, because many times you get something, if can't even be understood. I'm going, okay, what's this there? And I don't have time, and it might be a great idea, but it gets passed on. So the second thing I'd probably look for is if I see compelling ideas, I go right to the management section and just see if I see any familiar, anything's pop out. You know, what have you done for me lately? A track history, any familiar names? Do they work maybe with SpaceX? You know, have they had any successful exits? You know, that pops out. And probably the third, all equal, not necessarily in a hierarchy, is customers. Who would be the customers? Because users aren't necessarily always the same as the customers, but who are the potential customers?
Larry, when you get pitched, what are you looking for?
You know, I think I've always thought of, you know, being an entrepreneur is sort of basically being a problem solver. So I think the number one question is, what is the problem that's trying to be solved? And especially in the space industry, what is unique about space in which you can solve that problem? And as was just said, you know, who is going to pay for it? Because it's another big issue. You know, my dad likes to say, you know, are the dogs going to eat the dog food? But in addition to that, are they going to pay for the dog food? Which is, which in the case of a dog, I guess it's the owner that obviously is paying. But nonetheless, somebody's got to be putting up money for it. And something that when I worked at SpaceX, was one of the founding executives, and obviously I think a lot of people know Elon's passion for space and why he got into it. I got into it in a much more tangential way. Like Lon, background was in telecommunications, and you know, looked at satellites and kind of got involved through the satellite. And you know, somebody once said to me, which I thought was very prophetic, which is, you know, satellites are just tall towers. The benefit of satellites is just they happen to be really high up there. They get a very big footprint. So, you know, I have always thought about space as just a means to an end. You're utilizing something to do something else. Even in the case of space tourism, which is probably the most extreme, I guess, use of you know, it's by definition has to be done in space. But most of the things that are being paid for in the space industry are actually just utilizing it as a means to doing something on the Earth. And I think a lot of the people in the industry, and I'm starting to see this change, which is a good thing, we're attracted to space just because it's space. They're passionate about space. They're space zealots. And I think that for a lot of non-space people, that can be a bit of a turnoff because they want to understand that there's a real need, a problem that's going to be solved. Space, operating in space is very expensive, so it needs to be the sort of thing that can only be solved by using space to justify that capital expense.
Diane, but before I speak, before you speak, I'm sorry, can you please put your phones on vibrate, particularly if you're on the panel, okay? I'd really appreciate it, all right? All right, go ahead, Diane.
Hi, good morning, everybody. The first thing that we ask companies when we're evaluating them is, I would echo what Robert said, and that is how big, well, what is your problem? What's the problem that you're solving? And how big is that problem? Is it sufficient enough to warrant the building of a business? And then the next question is, again, is there a market for it? And where is that market? In other words, who are the customers?
Thanks. Got it off just in time. I agree with all the answers the other panelists have given, but let me look at it a little different way. I think there's an easy screening process up front, and then a longer, more difficult one in the back end that leads to actual checks being written. The easy one up front is, you know, did they hook me with the idea? Do I think it's interesting? Is the management team credible, enthusiastic, confident? Is this a real market opportunity as opposed to a small niche? You know, and are they realistic? That gets you in the door, allows you to make the elevator speech to the angel club or to the venture capitalists, and that weeds out a very large percentage of the opportunities. But once you get down to that list, and by the way, we have a business plan competition starting after this, and 10 amazing companies. I hope everyone sticks around for it. They have certainly all got their hooks into me with their ideas and their management teams. But then you get to the second screening, and the second screening is, do they really understand the addressable market they're going after and the competitors that are already there? And there's always competition. A lot of entrepreneurs sort of gloss over that, or they assume that they're just going to walk over the competition, or they assume their great ideas is just going to market itself. And people are really busy, they're really skeptical, they're really conservative. They don't change their behaviors and buy new things and do new things without a lot of coaxing and marketing and strategy. And you need a team that not only has all the great technical capabilities to build something, but actually has an understanding of what it's going to take to penetrate that market and take share away from other competitors. And secondly, also understands that none of this is easy. There's going to be lots of risk, and they're realistic and upfront with investors about the risk and explain to them how they, to the best of their ability, going to mitigate the various risks. And so I would say the second screen really is focused on competition, marketing strategy, risk mitigation, and that's where you spend a lot of time in due diligence to get to the check writing phase.
I want to follow up on something that Larry specifically mentioned, and that is, how important is it in the beginning to have customers? Not that you can identify customers, but that you can go to customers and actually talk with them and say, would you buy this product? Would you use this service? Is that an important feature, particularly at the beginning? Obviously, it would be great if it existed, but how critical is it in the very beginning? Robert?
I think it could just be might be letters from a company that just simply says we're interested in this technology. It doesn't have to be a signed agreement, just to show that there is a modicum of interest.
Mm-hmm. Is it that outside validation that helps? I mean, that's whenever I'm trying to raise money, I always try to get as much outside validation as possible. I assume that's critical still. Go ahead, Dan.
So for eSpace, we work with extremely small, very early stage companies. Many of them are just in an idea phase. And when we do the evaluation process, our network of contacts is so extensive within the aerospace industry and the various sectors that we go out, our investment advisory team, which is a subset of the board, goes out and asks experts in those sectors to participate in the evaluation of the company. And by doing that, we get a sense of whether there's a market and whether they might be customers. So when our companies come to us, they don't have customers. Part of our responsibility is to get them customers and to evaluate whether there are customers, which is why the market analysis that we assist them with is so critical.
There's a very good book called The Lean Startup, and that actually is to the point of really getting out there, talking to your customers, finding out specifically what they need, and really iterating and pivoting on your business as you move forward. And that's very important, especially if you need to raise money. If you have if you're in the fortunate position where you don't have to raise a lot of money initially, you can have a big idea, and often you may be ahead of the market. I got involved with two companies that I think had ideas that the market really wasn't ready to support, but they had founders that had big enough visions and strong enough confidence in their own ability to execute that they were able to do it. I mean, SpaceX, Elon was told by many, many people SpaceX was a bad idea and that there was no market. And I heard it all along the way too, which is that there's no demand there. There's plenty of launch capacity, and lowering the price isn't going to change the equation. And obviously, SpaceX has proven that wrong so far. And the same thing sort of with Teledesic, where I worked before, where we were starting a broadband satellite business when people didn't even really know what broadband was. The common refrain was, well, why would I need high-speed internet access? Why would I need anything other than 28.8 dial-up? And obviously, the founders of had the vision that we think there's going to be this thing called the World Wide Web. It's starting to catch on, and the bandwidth demands are going to continue to grow. And so, same thing with Craig McCaw, who started McCaw Cellular. When he started the company McCaw Cellular, if they had McKinsey going around on behalf of AT&T and asking people, would you use and buy a cell phone? And most people said no. Their prediction was 200,000 cell phones in the United States by the year 2000. So, there are some situations, if you have the capital and the confidence and the ability to execute even without those customers saying they're willing to pay, that you can move forward. But those are probably the exceptions, not the
Right.
rule.
Well, there is the factor. I mean, I work with Craig too, and Craig was also an inspiration for me to get XM Radio started. And he was the kind of person who he had his vision, and then he kept on doubling down. And people would say, no, this isn't. Many people would be skeptical, but then he kept on going, and at least in the cellular business, he did amazing things, and he saw that all coming.
With XM Radio, I mean, I remember when you were working on XM Radio, a lot of people said, you know, why would anybody ever pay for radio? I wasn't one of those people. I love music, so I got it. But I think a lot of people were saying, radio's free. Why would anyone ever pay for radio? And now you look at things like Pandora, and I mean, everybody's paying for radio.
And Slacker.
Yeah, and Slacker, of course. Yeah, sorry. Disclosure.
Thank you. It's very important. Thank you.
Yeah, I just wanted to add a few comments. For a lot of industries, market risk isn't that big of a deal. They're known, mature markets. For this industry, we did a study last year for NASA, and we spoke to lots of different types of investors. And in almost every case, market risk was identified as the single biggest obstacle to attracting capital to new space ventures. By far, it wasn't even close. And that's because in most cases, the markets are brand new. You're building something, you're doing something for the first time, or they're small, or they're dominated by government, and you don't know if there's going to be a commercial market to take over, or if so, when, and if when, how big it might be. So market risk is huge in this industry, and I think it's really stopped a lot of, because of a lack of customers, it stopped a lot of companies from being able to raise money, which is why I think NASA in some cases understands they may need to be the first customer or the anchor tenant to help get the business off the ground.
Robert?
Can we also chime in maybe about the types of investors? Because there might be some entrepreneurs who think, well, maybe I should just immediately start to go to, this major VC or institutional type of investor, and their idea maybe is not really ready for prime time,
right.
But they have to go to a group like us where we aggregate and bring together individual investors who invest in opportunities like these because they're small, because in a way it allows them to become to experience entrepreneurship again without the personal risk. So they can put in, whether it's somewhere between 25,000 and maybe, on high end, maybe a couple $1 million into something that they can be involved with, but without all the personal risk they might have had as an entrepreneur.
Right.
Can I add something to that? So again, talking about the very small companies, if you have an idea or have a team and you're starting to perhaps build a prototype, one of the things that eSpace does, and that I've found a lot of the companies that we are aware of, at least in Colorado, is that they start out as SBIR companies. They come to us, we help them connect with program managers in the various kind of federal agencies, because we have very close contact in there. So we help them secure their first SBIRs, SBIR 1, 2, and then they, at that point, if they've got a couple of SBIR 2s, then we start encouraging them to wean off the SBIRs so that they don't get into the cycle of an SBIR company, which is not the purpose of the SBIR program. And then we start going after the industrial contracts with them. And that's been a pretty successful model. We are not an organization that has the luxury of looking for independent either VC or equity investors in the very small companies. We're kind of pre-investor assistance. And so that's the model we've seen progress from idea through customer beyond an agency.
Robert,
We have a very complementary relationship in a sense. So eSpace, which we do have a partnership with, can help funnel opportunities to us and vice versa.
Right, exactly.
Let me respond to that a little bit. When I'm talking about investors, I am talking about sort of post-angel phase. We support both of these organizations. I think they're doing great work and are sometimes even angel investors ourselves. We see a lot of companies that, through friends and family, their own money, angel investors, SBIR grants, have raised a couple of $1 million, and they've built a prototype or they've stood up a business that looks pretty exciting. And now they need $3 to $5 million to get it to market. And that's when you're past the angel stage, past the incubator stage, and you need to start talking to either strategic investors or institutional, financial investors. And that's really the stage I was talking about. And that's, it can be really difficult in this industry. It can be worse in the case where what you're doing involves big space infrastructure and you need 300 to 500 million. It's those cases where, unless the market is really evident, you've got customers, it can be very challenging raising that money unless you've got a wealthy person behind you or government support.
First, I want to remind everyone, if you have any questions, just raise your hand. I'll try to. I was only kidding. You want to comment on my living room? You can. But I will in a second. But I did want to ask one question myself, if I can preempt you. Okay. And that is, we talk now a lot about getting money in the beginning. And I also note that at this conference and in other conferences, people talk about new space and old space and traditional aerospace and all that. But this question is about exit strategies. And when people talk about, well, I'm going to make a lot of money, and then you, the investors, are somehow going to make a lot of money with me, and then the investor will say, well, how am I going to make a lot of money, and when am I going to see that money? And is this an ongoing business, or is there really an exit strategy here? And often the exit strategy is it's either going to go public or big aerospace is going to buy me. And what do people say that convinces you that there really is an exit possible and that money will be made?
Okay.
Go ahead.
The reason why I kind of giggled is that in the 3 years we've been in existence, 3.5, we've had about over 100 companies who have come to us as candidates. We've incubated 13 of them. I'd say 98% of those companies have no exit strategy, which makes it very difficult to attract investors. This is their passion. They're not interested in turning over a software company as quickly as possible and then starting another one and getting as much revenue from that as possible. This is what they're going to do for the rest of their lives. They may have a partnership with a prime or a larger or medium-sized company, but this is their company and they're going to stick with it until it either goes under or they do. So,
the flip side of that is when you do see a management team that walks in and says, we're going to build this business and sell it in 5 to 7 years, and here's who we're going to sell it to, and here's why they're going to buy it, and by the way, we've done this before. You'd like hug them, because it's so rare to find that. So keep that in mind when you're looking for money.
I was going to say the track history that Hoyt was mentioning, but I just want to give a few metrics on the earlier investor side. Like a typical angel investor might make 9 or 10 investments over the course of their life as an angel investor and only have 2 exits. And I just looked up from the University of New Hampshire, a great database on angel investing. In 2011, there were 61,900 companies that received angel investment. Now, we're considered one of the only groups that's specializing in angel investment. And in about past 15 months, we've had about 5 deals invested in. And we have a database of about 100 companies. So this is still, there's a lot of fertile ground. We have a lot of, if we want to expand the industry, 61,900 minus 5. It's a lot. And a lot of times, many of these investments in angel opportunity, they lose. Investor does not get a return, so they have to make multiple investments.
Right.
I guess just to add, especially because let's talk about the opportunities that are out there. There are opportunities other than going out and raising capital from angel investors. One of the firms that I'm working with and representing here is the Center for the Advancement of Science and Space, and they have money from NASA to invest in projects on the space station. So that's another path, because obviously in the space industry, one of the challenges is it takes a lot of upfront capital to do almost anything. So look for ways to lower the bar, and working with cases which was stood up by NASA, basically to be the interface to the private sector for doing opportunities on space station. It's a a much lower bar to proving out for qualifying your hardware in space and proving out the technology. And I do think, as has been indicative by even the fact that we're just having this conversation, that there are emerging opportunities. I really do think, SpaceX is in many ways the kind of Netscape moment for the space industry. It's all of a sudden, we're really seeing a lot more opportunities. We are actually seeing any angel investing in the space industry other than people who really, frankly, have so much money as in the rounding error kind of thing. So it's an exciting time, and I really do think, even all the comments notwithstanding, there are opportunities out there, but you've got to craft them in a way. And ideally, you walk in, I think, and you say, this is how we're going to make a lot of money, and it's great if we have an exit strategy, but if you can self-fund yourself and you don't really need outside investment, that's the best way to build a business.
Ken, I'm going to get your question. And I don't have it, so why don't you ask it?
Okay, I was just going to say, it seems like Diane was very...
We have a microphone coming, and
I can read it.
sorry. Yeah, can you read it to me? Because
Yeah, I'll read
it's
it.
not, wait, it's here.
Do you got it?
Yeah, but say it. You're there anyway.
Okay.
It's more interactive.
I was going to say the Diane was the preliminary, working with early stage investment. It sounds like Space Angels is the next step, and then Near Earth was far end. I'm just wondering where Capture 10 fit into that progression, and maybe you should seat them on the chairs.
Well, one thing, obviously, I mentioned cases and opportunities. Really, with the Capture 10, my firm is helping companies with technologies in space, technology in general, go and capture new billion-dollar, 10-digit markets. And so it's really a strategy and business development firm, not a investing firm.
Questions? Burton?
Thank you.
And by the way, thanks for dressing up for the...
Yes, so this is my Ukrainian-Russian t-shirt, which says McLennan's and the party's over, courtesy of friends in Kiev. I work in Europe a lot. So I gave the keynote talk a couple of days ago at the business plan competition and showed some figures presented by, I think, McKinsey, that as of February 2012, over 19,000 digital healthcare applications, apps, have been put on the marketplace, 19,000. So when you add in digital or edutech, when you add in the mainstream of gaming, social, mobile, big data, et cetera, and the clear exit strategy, the clear path to hockey sticks in some cases, the speed, the low market risk in many cases, how do hardware companies, and this is a question not just for space companies, but for medical device and other hardware companies, how do you justify to investors at all that they should invest in anything related to hardware? Whether it's space or otherwise.
I agree that is one of the challenges in a world where, and it's really the internet that started this whole thinking that it's easy to get into a market. Whether you can build a business around it's another story, but at least the risk is low as far as cash goes. I think what happens, it gets really crowded. Now I'm answering the question. I'll let these guys but the answer, I think, and I'd like to hear your opinions on this, is that the internet, low barriers to entry, anyone can get in, but then it gets crowded real fast. And the flip side argument, if you can convince people who have money, is that, look, there is a barrier to entry, that once I do get this money, and once I can do this, others, it would be much more difficult for others to follow. I think that's the way you answer it. Whether it's easier to do or not is another story. And I'd like to hear your opinions on that.
There were two anecdotal things I saw recently when Facebook had their IPO, was around the time SpaceX when had their last flight. And there was an article in the private equity magazine that I saw that actually was kind of comparing Facebook, and we know what happened with the IPO there and the challenges there in SpaceX, and he says, gosh, maybe now it's actually a good time to be looking back at hardware. Barriers to entry, potential profits, market opportunity, customers, Facebook, maybe they were over-exaggerating, where their growth is. And then there was a second example, not quite related, but on Kickstarter, the crowdsourcing platform, there was this product. It was like a wristwatch. Basically, like, I don't know, it was like putting the iPhone on a wristwatch or something like that. And they raised like, somebody know, like $10 million through crowdsource. And this is a hardware that I don't even think they have a prototype. So I'm not sure if there's the platform is going to happen for a space-enabled crowdsourcing effort just yet. But sometimes there are things just that surpass even maybe just logic. There is an emotional component to some of this stuff. When you talk about getting an investor to invest, it's like dating. That first couple times you meet, it's not just what pencils out. It has to really also be, there's usually an emotional connection on the early stage side that the investor says, gosh, I get this. I see the enthusiasm. I see the great plan. And they have to almost be psyched into this as much as the entrepreneurs to sort of say, I get it. I want that 30x return. It might not be realistic, but I want it.
Larry?
Yeah, I think, you know, the comparison to Facebook and SpaceX is a good one. Hardware is hard, and it typically takes a lot of upfront capital investment. But I was meeting with GoPro yesterday. I don't know if you have ever heard of GoPro. If you have kids, you probably have. They developed the best high definition small cameras that are used by a lot of people and sports enthusiasts. And they nailed the product, and it really wasn't anything all that unique in some respect, except for they just nailed it, and they've got the best one out there. They've got market share. I met with a guy who was a 150th employee. He was hired in February, and now they've got 300. So I mean, there are opportunities out there in the hardware space. And it's great to see the United States. This is, I think, with SpaceX, a somewhat untold story, that we're back into the manufacturing business and we're kicking the world's butt. So we can do manufacturing in the United States, and it can be done very well. And a lot of the space business, by definition, does require hardware. Right. So not to say that it has to. There are other opportunities out there. Another success story that I'd mention is Skybox Imaging, which is guys that really came out of Stanford with an idea to utilize space and do imaging. They've raised capital from the who's who of the venture community that have invested in the company. They've raised a total of $90 million. They've gone through 3 rounds of financing, and they're doing some great things, and they're doing things that no one else is doing, and frankly, just doing it better. They're not actually that no one else is doing it. So there are opportunities out there. There are reasons for optimism.
I think the statistics I saw most recently is that in the last 10 years, 80% of venture funds had a negative IRR. And the top quintile wasn't that much better. Unless you were one of the top 20 or so venture funds that happened to have gotten into Facebook or Twitter or some of these other deals, you didn't really give your limited partners the returns that you would expect from investing in a venture fund. So it hasn't been a good prior decade. And my argument to these guys is because you may be all chasing the same deals and bidding them up instead of looking for opportunities in hardware and some other new sectors that you're not focused on. And I think that argument is starting to get some traction. But I would say most of the investors we talk to, they're still focused on social media and internet because for a very little amount of money, you can maybe get $1 billion business, and that's how you get to the top of the rankings in your industry. That's how your name, becomes great, and so it's just psychologically, important to a lot of these firms to have that sort of ranking to attract money and have the respect of their peers. But we're still trying. And I'll give you one example. We were raising money for a hardware company, and within 1 week, the partners at 2 different venture funds told us that the general partnership had decided to focus only on social media and internet, and they were getting out of the hardware business and wouldn't look at any future deals. And one of the 2 partners decided to leave the firm, and because of that. So I wouldn't say we've reached the peak of interest in this social media, internet type applications, and the days are going to be better. It's still a frenzy out there. Most of the incubators you go to are still focused on building iPhone apps and web-based businesses. So that's still where most of the money and interest is. And I just hope we can, with successes like SpaceX and more publicity and more successes, start building greater interest within the investment community that you can make money in space.
There's a great book that I was checking out recently called The Myths of Entrepreneurship from Scott Case from Case Western, but no relation to just happens to teach at the school. Talks about a lot of times venture capital looks in the wrong areas, and they tend to be kind of geographically focused many times. Whereas our group, we're virtual and global reach. We have investors maybe in Wisconsin, New York, Southern California, and all the space-related deals are not necessarily in Mojave or North California. They're all over the place. So it's being able to have a wide radar. And for the entrepreneurs, it's a matter of building a great business. Don't try to build a great space business. Just build a great business.
Question? There's a question.
Yes. What impact do you think the Jobs Act will have on early stage capital raising, particularly with the space industry?
From the crowdsourcing, the ability to crowdsource? I personally have not yet been involved with any of the crowdsourcing efforts, and I don't know if anyone on the panel has seen space companies, space-related companies getting funded through crowdsourcing. My guess is it's probably happening, but I'm just not aware of it.
Yeah.
And typical angel investment creates...
Hold on. Sorry? Okay, what team is that?
That's us. We just closed the Kickstarter campaign. Yeah.
What? I'm sorry? NanoSatisfy? Okay, wait, can you give him the microphone?
Thanks. I wanted to talk to you after about it.
No, talk to us now.
Okay. So we're NanoSatisfy. We just closed the ArduSat project on Kickstarter, and we grossed just over $100,000 for our platforms. Thanks.
Thank you for sharing that, and I appreciate you telling us that. Thank you.
There's a few other space-related Kickstarter projects. So go to Kickstarter. There's a couple of other crowdsourcing, crowdfunding sort of sites, but most of the activity I've seen is on Kickstarter. Some aren't getting funded, but some are getting 2 or 3 times the amount of money they're asking for. There is limits, so it's the new Jobs Act crowdfunding legislation limits the amount that anyone can invest to $10,000. And still has some requirements in terms of audited reporting, audited accounting reporting that will be very difficult for a lot of small companies. So people are going to have to figure out legislation and rules that make sense for these small companies. I think they'll figure it out and get it done. And I think it was at this conference last year, one of the young organizers of this Space Frontier Foundation came up to me and said, wouldn't it be great if you could get 1 million people together to invest $10,000 each and do it over the internet? And I said, it would be great because you've got all these space enthusiasts all over the world, but it's illegal and you can't use the web that way, and you can only talk to accredited investors. And then the Jobs Act comes out and they're making it happen just 1 year later. So this industry, more than almost any, has enthusiasts all over the world that would write small checks. And I think the ArduSat Kickstarter example is just the first of, I hope, many, many successful crowdfunding.
Would you look at that as when someone who would start with Kickstarter, if they then came to you for a later stage investment, would you view it positively?
Oh, definitely. I mean, for a couple of reasons. One, they were able to market their business to a broad audience and in public, and they risked failure, very public humiliation. A lot of these don't get funded. So if they got funded, it's because they've got a good idea and they know how to market, but also because now they've got 10,000 people out there cheering for them, right? And they can help in many different ways, just virally by being missionaries, evangelizing. So yeah, I think it's a very worthwhile thing to do.
More related to jobs, maybe not exactly to the investment part, but on the traditional angel early stage investment side in 2011, each investment created about 6 jobs, at least in 2011. Now this is outside of space, all inclusive of everything in the 61,900 investment opportunities.
Let's stick on Kickstarter. I'm actually fascinated by this. So let's say they fail. All right, let's say they go to Kickstarter and they don't get money. And assume they told you that. Well, I'm not going to ask you yet because you're later stage. But in the beginning, when they came to you, is it a positive if they got money? I assume yes. But if they don't get money, what are you thinking? And they told you.
How did they execute that effort? I would want to see tactically how it was executed. Mm-hmm. And actually that might give me some thinking on, do they have a marketing perspective? Do they have any financial perspective? Are they just completely engineering focused?
Mm-hmm.
So I agree with you very much, Robert. One of the challenges we have with our companies is our companies tend to be age range from recent graduates to retired folks, so we're all over the board. The ones who have probably the most promise are companies that are in their 30s to 40, or the individuals are between 30 and 40. They've worked at other large companies, come out with an idea, they find a market gap, they think about it, and come up with an idea. Unfortunately, these individuals are very smart, but lack the business experience and know-how, and it's not rocket science, so to speak, but it is really important. And it's difficult sometimes to explain to these very smart engineers that they really do need some business mentoring. And so if they came to us as a failed crowdsourcing, it would not be that important to us for the reasons that you had mentioned, Robert, and that is that we don't know how they presented themselves, or if we looked at it, we could say, you didn't present yourself properly. The pitch is so critical, and what we do is help them with the pitch. So,
I just want to add one thing. There's lots of good businesses out there that really don't lend themselves to a Kickstarter type program, because what you're offering the audience is not equity. You're offering them, the experience of being a supporter. And if you've ever been on that, there's different levels of money you contribute, and you get different goodies depending on how much money you contribute. So you got to be able to give them some tangible thing, whether it's a T-shirt or a piece of hardware or something. And some businesses don't lend themselves to that sort of almost consumer mass marketing type of an effort. If you can be creative and figure it out. I saw one Kickstarter raising money to finish a children's book, and if you contribute enough money, they would have the character look like you or be named after you. I mean, it's stuff like that. There's one Kickstarter for spacesuits, and if you give enough money, they will give you a spacesuit.
Follow-up to this question.
Please, Mr. Lee.
My name's Burton Lee. I sit on the advisory board of Grow VC.
Actually, I should say Dr. Lee, excuse me.
Grow VC is one of the leading equity crowdfunding sites globally. We're based out of London with operations in Helsinki, Hong Kong, US. So we watch this equity crowdfunding space very quickly, and it is important to distinguish between equity crowdfunding versus the pre-purchase type of crowdfunding, which is essentially what Kickstarter is. Our assessment is that the equity crowdfunding space is still in very early days. There are major issues of trust and potentially fraud and scam, which have not been addressed. We believe there needs to be essentially a new ecosystem built around equity crowdfunding of certification agencies, for example, so that you can be sure that a company you're investing in actually is bona fide. Now, where we do see equity crowdfunding actually having the earliest potential impact is in topping off of existing angel rounds or seed stage, early stage VC rounds for a couple of $100K, for example, where the due diligence has already been done, where you see some equity investors who have reputation have already checked out the company, so the fraud, scam issues are really taken care of. We don't see broad, adoption of equity crowdfunding for space or any other industry until these broader issues of trust in the marketplace are established.
Thank you. Who's over there?
Yeah, hi, good morning. There was a lot of discussion yesterday about COTS and the COTS model, what we call the commercial leverage model, where the government comes in and does something where there's both government and commercial interest. And then you mentioned the SBIRs today, which is a big government program for helping develop technology. So I guess one of the questions is really two questions. One is, what can the government do to help? Are there other things like that you guys know of or can think of that would be helpful? And then two, when somebody comes to you and says, well, a significant part of my market or my customer base is the government, is that a positive or a negative?
Those are great questions. Diane?
So one of the things at eSpace, I believe that only about 30% of the SBIR1s transition into SBIR2s, and then SBIR2s pretty much stall there. Probably a very small percentage, I don't have the figure, but a very small percentage of those transition into viable companies. So the way the SBIR program was originally developed was that it was supposed to help commercialize research that was being funded through the government, and it over time became research that was of great interest to specific individuals in various agencies, with or without the interest in commercializing it. So one of the things, for instance, eSpace did was to pitch NASA to say, okay, we'll take your Colorado phase 1s and phase 2s, we'll incubate them, and we'll help commercialize them and improve that conversion rate from 30% and then the phase 2s from a much smaller amount into a much higher percentage. And they were very, very interested in that. However, they couldn't figure out a way of doing that. And so we suggested that they have an SBIR topic of helping to commercialize the other SBIRs. I think one of the models is NSF has a great model where they have entrepreneurs who are on the panels to determine the commercial viability. Some of the other agencies do not have that, and I think that's a real shortcoming in the process.
Larry?
I would strongly recommend looking at the government for a customer. The government is the biggest procurer of space services, and not just the U.S. government, which is the single largest, but international governments. One of the things I did at SpaceX was go around the world and talk to international customers, and SpaceX has captured quite a bit of that market. So I think you would be probably remiss not to be looking at that. And the U.S. government is obviously a very good customer to have, and sometimes it can be challenging penetrating that business. There are high barriers to entry, but in this industry, I think it's very difficult not to look to that opportunity.
Thank you. There was another question. I saw another hand was up.
You have some web questions as well.
That's good. That's a good question. But go ahead, sir. Because you're here, and then I'll get this one. We only have 10 more minutes, so we're going to go fast. So
I think there's a lot of entrepreneurs and businesses. They say until you have a customer, your business is really just a hobby. And I think with VC that until you have an exit, your VC is your firm is sort of charity. So how do you deal with it in the aerospace industry where you have such long lead times on exits for these companies? Do you wait until either government funding or angel investors get you there, or who are your investors and why are they doing this?
just because there's no exit, the investors can often feel good about their investment and they can believe that it's rising when they get their quarterly returns on the growth of the business. So, I think a lot of investors, almost by definition, if they're in the space industry, do have longer-term horizons and longer-term visions. And, SpaceX has not, quote unquote, had an exit yet, but I think all of the investors in the company feel great. And they see a lot of progress.
But certainly SpaceX intends to go public. I mean, there is discussion of that.
There's certainly lots of discussion about it.
There's a lot of discussion about that, yes. Whether it does or doesn't, we'll see. I agree.
Yeah, there is a small set of venture firms and private equity firms that do have a longer horizon because they understand this industry requires it. But it does mean, particularly if you're doing something that costs hundreds of millions of dollars or billions of dollars, it makes the ROI hurdle extremely hard to hit if it takes you 3 to 5 years to even get into business. So that goes back to the market risk. The market's got to be really nice to withstand that long lead time to get into market to still hit those investment hurdles. So it's challenging. But there are other types of investors that are more patient, strategic investors. There's lots of family offices, of wealthy families, individuals that have a much longer investment horizon. So, but most venture firms, they aren't interested in the industry, and part of that is because of the heavy government involvement. A lot of them aren't comfortable investing in a business where government is 100% or a majority of the revenues.
There's an interesting question here, and I'm going to move things along a bit, so I apologize for, and please, quick answers so we can get things going. A question here is, I don't know if we can actually tell the exact percentage, but the question is directed toward how many space companies started and got their funding from people who were not in space businesses. Obviously, Elon Musk and Craig McCaw come to mind, Cellular Radio and PayPal, and then they had their own visions. So when you're seeing these startups, how many of these people who you're meeting are not necessarily people who've started in the space business, but now they want to get into space?
I've seen a lot from computer science, other engineering disciplines, but percentage, it's still pretty low. It's pretty low.
Is it? Okay.
Yeah.
It's mostly aerospace engineers and
related, and when it's a space-enabled startup. But there's a lot of startups out there that had early stage financing from Space Adventures, Zero Gravity Corporation. So a lot of these companies have done it and have had some type of exit.
Sure. I'm sorry, Diane, I thought you were going to...
Zero of ours have had investments or interests from outside of aerospace. Despite, we've got 3 or 4 of our 13 companies that have very strong applications to non-aerospace, health, clean energy, et cetera, and those haven't bitten yet, and we're really disappointed because we actually see those industries growing much more, those applications growing much more quickly than the aerospace applications.
Yeah, along those lines, do you, when you look at companies that are in the aerospace business and you're looking for what their various revenue streams are, do you hope that there's also a terrestrial component, that there's another application to this besides space-based? Is that important?
We'd love to see that because, it's like a diversified portfolio. And originally we thought that if they had, multi-industry applications, that they'd have a better chance of being successful. However, we have found that the companies that we're incubating have better success with the larger aerospace companies who are interested in what they're doing.
Just quickly add to that, it's great to have multiple potential revenue streams from different industries and applications. However, it's better if it's staged, because a small entrepreneurial team can't do everything at once. It's hard enough to get one business and one revenue stream going. So an investor wants to see focus, on a core business, and then maybe there's some sizzle after that.
Right. Okay, a lightning round. When you meet people, what are the personality traits that you're looking for in the management team? But lightning round. I want it fast. Robert.
Articulate, focused.
All right.
Perseverance.
To that, I would add the willingness to learn and to understand what they don't know.
Those are my top three.
That's okay. Now, let's go back to exit strategy for a second, and again, quickly. Is it important that there's going to be an exit? We've already touched on this, but people aren't, like, for example, you mentioned that it's okay if they just want to build a business and get a dividend.
Yeah, I mean, I think what's most important, return on investment, and how people define return on investment is going to differ greatly.
Robert, are you looking for an exit?
I concur with Larry.
You concur with Larry that dividends and just building a business is okay with you?
That's okay, but if there's
as an angel investor.
Not as an angel investor. It's all depending on what the expectations are at the start.
Okay.
Sometimes an angel investor also invests for bragging rights.
Okay. That's fine.
I would say eSpace, because of the organization that we are, we're not interested. We're not as interested in the exit strategy. We're looking for customers and success, early success for our customers, for our companies.
I guess my piece of advice would be, don't oversell the IPO potential of your business. Very few companies are good public vehicles. Yeah.
Especially in this business.
Exactly. So there's other ways, dividends maybe, recapitalizing the firm if it's generating cash, borrowing money and paying a big one-time dividend. But usually it's a strategic exit to someone.
Sorry, Larry, did you have something else?
No.
Okay. Other questions before, because we're almost done? Okay, and I have no more questions. Wait, I have another one here. Regulations. Are there certain rules and regulations that you'd like to change? You touched on one, that things have gotten better maybe. But when it comes to early investments, what do you want to see our government do with regard to changes in the laws?
Well, I was talking about the crowdfunding, and I think Burton's comments about the credibility is one of the big obstacles right now. And using crowdfunding as the co-investment source behind some lead investor, I think, is going to be the answer for the near term until they've solved that problem, but also figure out ways of allowing companies to raise more money and still act like small companies. So hopefully they'll figure that out.
I think in many ways the regulatory challenges in this industry are overstated. Thanks to George Neild and a lot of the effort from the FAA, there are champions in the government that are there to knock down the burden of the regulatory challenges. And in fact, the one that gets talked about a lot is ITAR and the challenges that's the international trafficking arms regulation, which can make it challenging, especially if you are a non-U.S. citizen, to work in this business. I will say that. But ITAR can also be a benefit to a U.S. company because it actually makes it more difficult for a lot of American businesses to go overseas to buy their products because of ITAR. So it can be an actual advantage if you're an American company.
So the chance of a Chinese acquisition of SpaceX?
Low.
Everybody, it's the end. I want to thank our panel, Diane, Hoyt, Larry, and Robert. Thanks for coming. Thanks for getting up so early. And the business competition is going to be great, so stick around. Thank you, Larry. Thank you. And by the way, actually, I want to applaud you for those of you who are at the party and somehow worked through your hangovers and now you're here. I appreciate it very much. There'll be plenty of parties, I'm told, so if you came home early just to get enough sleep to be here, that's even better. Well, thank you all for being here. I was looking at this, Space is a Place, Not a Program, that one. And as I was looking at it yesterday, thinking about our panel, it's really Space is a Business, Not a Program, which I think is where there's a change over from space being government programs. Government gives you money, you get going, and you manage the money that you get to building businesses in space. I'm going to introduce the panel. We're going to talk about a number of things. First, a few things. We're going to be interactive throughout the entire discussion. No presentations. Please ask questions if they come to you, and I'll try to recognize you as quickly as I can. Also, you can tweet. Here's the tweet information over here. And also, we're going to be on the internet, so there'll be other questions. They're all going to come to me here. So any way you want to communicate with us, we welcome them. Is this on too? This one isn't on. Is it? Is it off? Okay, great. Let me introduce the panel here, and then we're going to get going. By the way, you can read their bios in the book. No big bios here, just real quick things, so you know who everyone is. Over here is Diane DeMeff. Diane DeMeff is the executive director of eSpace, which is a nonprofit group that helps entrepreneurs develop different ideas in the space area.
And why he got into it. I got into it in a much more tangential way. Like Lon, background was in telecommunications, and looked at satellites and kind of got involved through the satellite. And somebody once said to me, which I thought was very prophetic, which is, satellites are just tall towers. The benefit of satellites is just they happen to be really high up there. They get a very big footprint. So, I have always thought about space as just a means to an end. You're utilizing something to do something else. Even in the case of space tourism, which is probably the most extreme, I guess, use of it's by definition has to be done in space. But most of the things that are being paid for in the space industry are actually just utilizing it as a means to doing something on the Earth. And I think a lot of the people in the industry, and I'm starting to see this change, which is a good thing, were attracted to space just because it's space. They're passionate about space. They're space zealots. And I think that for a lot of non-space people, that can be a bit of a turnoff because they want to understand that there's a real need, a problem that's going to be solved. Space, operating in space is very expensive, so it needs to be the sort of thing that can only be solved by using space to justify that capital expense.
Diane, but before I speak, before you speak, I'm sorry, can you please put your phones on vibrate, particularly if you're on the panel, okay? I'd really appreciate it, all right? All right, go ahead, Diane.
Hi, good morning, everybody. The first thing that we ask companies when we're evaluating.
Welcome to the second day of the NewSpace 2012 conference. My name is Dan Pastiff, and I have the pleasure of being today's manager for the day's proceedings. Yesterday, we had the opportunity to discuss how different models can lead to great ideas. Or yesterday, we had the idea to discuss how different models can lead to great ideas and how the average citizen can get more involved to make space more relevant to everyone. Today, we'll jump forward and examine how that work and others can serve to drive us forward in opening up new opportunities in the space industry. This leads me to our starting panel. Any new business venture needs to understand the difficulties and challenges that it'll take to launch itself. One of the most critical components in particular in the space industry is securing investment. This morning's panel will focus on how to create a viable industry, and I hope this panel will be useful as well for our business plan competition. To lead this panel off, I would like to introduce Mr. Lon Levin. Mr. Levin has over 25 years experience in new media, space, and telecommunication industries, having served as the founder of Courses XM's radio. He currently serves as the president of Sky 7 Ventures, which works with and invests in new technologies. His recent work has included working with companies such as Slacker Radio, ATK Aerospace, Blue Ridge Networks, and Sentinel Satellite. Without further ado, Mr. Levin.
What are you applauding for? All right. But thank you for applauding. Over here is Hoyt Davidson, the founder and managing director of Near Earth, which is one of the premier investment banking firms in aerospace. Larry Williams, my friend Larry Williams here, who has been an entrepreneur for many, many years. He has had the privilege of working with both Craig McCaw and Elon Musk at various times. By the way, Craig McCaw also a mentor of mine, as you know that. And Larry now is the principal of Capture 10, which works with high technology companies. And my friend here, Robert Jacobson, and Robert is the principal with Space Angels Network. All four of them will be speaking with you about new businesses, how to get going, what they look for in investments, recommendations to entrepreneurs, and anything else you want to talk about. And my first question is not how do you make a decision to invest, but the very first question, is what do you look for when someone comes to you and has an idea? What are you looking to continue the conversation to the next level? I asked that of Robert first. And there's the mic.
Good morning, Lon, and good morning, everybody. Thank you for coming on this early morning. So the first thing is, can I understand this idea? And better yet, can my mom understand this idea? It has been articulated in such a manner that, my mom, a non-engineer, could understand this, because many times it gets something, if can't even be understood, I'm going, okay, what's this there? And I don't have time, and it might be a great idea, but it gets passed on. So the second thing I'd probably look for is if I see compelling ideas, I go right to the management section and just see if I see any familiar, anything's pop out. What have you done for me lately? A track history, any familiar names? Do they work maybe with SpaceX? Have they had any successful exits? That pops out. And probably the third, all equal, not necessarily in a hierarchy, is customers. Who would be the customers? Because users aren't necessarily always the same as the customers, but who are the potential customers?
Larry, when you get pitched, what are you looking for?
I think I've always thought of being an entrepreneur is sort of basically being a problem solver. So I think the number one question is, what is the problem that's trying to be solved? And especially in the space industry, what is unique about space in which you can solve that problem? And as was just said, who is going to pay for it? Because it's another big issue. My dad likes to say, are the dogs going to eat the dog food? But in addition to that, are they going to pay for the dog food? Which in the case of a dog, I guess it's the owner that obviously is paying. But nonetheless, somebody's got to be putting up money for it. And something that when I worked at SpaceX, was one of the founding executives, and obviously I think a lot of people know Elon's passion for space.